Welcome, my friends. If you follow this channel, you already know that layoffs are basically in full-on mode in technology companies. In fact, there has been so much layoff news that I have had difficulty finding time to cover anything else. You have heard about the 50% layoff at Twitter, the 11,000-person layoff at Meta, and the 10,000-person layoff at Amazon. Well, today Kraken announced that it is laying off about 30% of employees. For those of you not familiar, Kraken is the world's third largest crypto exchange. Binance and Coinbase are both larger. And who did management blame? Well, I think that you already know. The usual whipping boy, the weakening macroeconomic environment, and geopolitical factors. News of the Kraken layoff comes on the exact same day that DoorDash announced 1,250 job cuts. The job cuts also come amid massive turmoil in the entire crypto ecosphere. This video continues our coverage of the wave of layoffs sweeping the United States. What does it mean for crypto companies? What does it mean for Silicon Valley? What does it mean for the economy? And what does it mean for the future of the United States? But before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Kraken announced today that it is laying off 30% of its employees. For those of you not familiar, Kraken is the third largest crypto exchange behind Coinbase and Binance. That amounts to 1,100 Kraken employees. Co-founder and CEO Jesse Powell confirmed the job cuts in a memo to employees today. Slowing growth, prompted by macroeconomic and geopolitical factors, had muted customer demand, Kraken CEO Jesse Powell said in a blog post. In addition, lowered trading volumes were also factors, Powell also said. We had to grow fast, more than tripling our workforce in order to provide those clients with the quality and service they expect of us, Powell continued. This reduction takes our team size back to where it was only 12 months ago, Powell also said. I remain extremely bullish on crypto and Kraken, Powell added. Crypto exchanges have been buffeted by withdrawals and regulatory scrutiny. After the implosion of FTX, Sam Bankman-Fried's crypto empire filed for bankruptcy on November 28. FTX has shed several hundred employees in the restructuring process. Barry Silbert's digital currency group laid off about 13% of its staff in November. Crypto.com laid off 2,000 employees in October. We will offer 16 weeks of compensation as severance and will extend the affected employees' exercise window. Powell also noted. The job cuts at Kraken come as contagion spreads like wildfire in the crypto business. Every week, and sometimes every day, brings announcement of bankruptcies and layoffs. Yesterday, distressed crypto lender BlockFi has filed for Chapter 11 bankruptcy protection. At one point, BlockFi expected to be acquired by none other than now bankrupt FTX. The BlockFi bankruptcy filing listed more than 100,000 creditors. Notably, the BlockFi bankruptcy filing also listed an outstanding $275 million loan to FTX. You remember FTX, Sam Bankman-Fried's now bankrupt empire. BlockFi is just the latest crypto company to fail. After the implosion of Three Arrows Capital, and the bankruptcy of FTX, and its wholly owned crypto hedge fund, Alameda Research. At that time, BlockFi announced that it had significant exposure, Sam Bankman-Fried's crypto exchange FTX, as well as its wholly owned crypto hedge fund, Alameda Research. The company began discussions with restructuring advisors just days after FTX's bankruptcy filing. BlockFi was most recently valued at $4.8 billion. Many crypto firms are teetering on the brink of bankruptcy following the collapse of FTX. In July, FTX swooped in to help BlockFi stave off bankruptcy. This past summer, FTX extended a $400 million revolving credit facility to BlockFi. The credit line was seen as a last-ditch effort to stave off bankruptcy. And FTX actually offered to buy BlockFi. But now, both companies have filed for bankruptcy. Cryptocurrency exchange FTX filed for Chapter 11 bankruptcy on November 11. Since then, fear and contagion are spreading across the entire crypto ecosphere like wildfire. Somewhere around 130 other companies are being roped into the BlockFi bankruptcy case. Alameda Research, FTX, and others. FTX went from a $32 billion valuation to bankruptcy as customers rushed to liquidate their accounts. FTX customers demanded withdrawals immediately, causing FTX to experience a liquidity crisis. This is the cryptocurrency equivalent of a run on a bank. Gross negligence at FTX has been highlighted by John Ray. A substantial portion of assets held with FTX may be missing or stolen, John Ray also added. FTX lists more than 1 million creditors in its bankruptcy filing. This suggests that there will be a huge impact of its collapse on crypto traders worldwide. Not to mention the many other counterparties connected to Bankman-Fried's empire. As you might imagine, there are fears that the collapse of FTX will lead to more destruction in the cryptocurrency world, and create a contagion that might hit almost every crypto investor in the United States. That includes everyone from individual investors to major Wall Street institutions. Speculation is swirling that cryptocurrency trading platform called Genesis will be the next domino to fall. So far, that has not happened. But how far off can it be? But Genesis has reportedly warned potential investors that it may need to file for bankruptcy. Genesis is experiencing liquidity problems as investors pull funds from their cryptocurrency accounts. If it does not manage to quickly raise a significant chunk of cash $1 billion, it could have to file for bankruptcy. And there are more ominous signs. Gemini Trust has suspended redemptions of customer funds from their accounts. It has also stopped originating new loans. Crypto contagion is a real possibility in the decentralized blockchain system. And since digital currencies are unregulated, there are virtually no investor protections. Cryptocurrency companies are not bound by standard accounting procedures and controls. That means that these companies can be tangled up with one another in unclear and unprecedented ways. For example, FTX had deep ties with about 100 other crypto companies around the world. And, as we are hearing from the FTX bankruptcy, it had more than 1 million customers. That paved the way for its financial troubles to spread quickly. But the collapse of FTX stretches well beyond companies and investors with direct exposure to FTX. The spectacular implosion of FTX has stoked volatility in cryptocurrency ecosphere. And it has led to collapsing values of cryptocurrencies and Bitcoin. Actually, cryptocurrency values have been falling steadily this year. And now, they are falling even more. Not to mention that is causing a major wave of panic. Binance and Coinbase are two other cryptocurrency exchanges that are, for the moment, still operating. But both have experienced sizable drawdowns recently. But this might still be just the tip of the crypto crash iceberg. As I am sure you know if you follow this channel, Coinbase is one of the few remaining cryptocurrency exchange companies. Although it is still operating, Coinbase has not had a good year. In fact, it has laid off hundreds of employees. And the FTX bankruptcy is casting a shadow of doubt over the entire cryptocurrency world. Coinbase is now caught up in the contagion. And so is the leading cryptocurrency, Bitcoin. Shares in Coinbase continue to fall as the Bitcoin slide continues. The value of Bitcoin also continues to fall. Investors are clearly worried about contagion from FTX's stunning collapse last week. FTX's bankruptcy came just 19 months after going public with a market capitalization of over $85 billion. For those of you not familiar, market capitalization is considered to be the total value of a company. Now, the market capitalization of Coinbase has dipped below the $10 billion level. The health of FTX's rival exchanges has now come into question. It has sparked industry-wide sell-offs and some companies have suspended trading. Some cryptocurrency companies are preparing their own bankruptcy filings. Prior to FTX's bankruptcy, the market was in the midst of a crypto winter. Bitcoin and Ethereum were falling in value and had forced a number of crypto companies into bankruptcy. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.